Awesome. Hi, guys. My name is Claudia, and I work on the campus recruiting team here at Insight. We have an awesome presentation laid out for you guys. So we'll run through it for about 30 to 45 minutes, and then we'll end with some Q&A. So I'm going to hand it over to our presenters to introduce themselves before starting the presentation. So Avi, do you want to start, and then you can pass it along to the others?
Yeah. Hey, everybody. That was one of the best intros to a Zoom virtual event I think I've seen. So that was quite unique and hope you enjoyed that. But I'm Avi. I am now a second year analyst on the investment team at Insight. I joined full-time right out of college, but I didn't intern here in case anyone has a question about that. And I'm originally from Bakersfield, California, and got tipped off to the East Coast for the first time to go to Yale, and I studied statistics, and I'm lucky to be in New York right now.
I guess I'll take it. I'm Josh. I went to Duke, summered last summer, came back full-time, I guess, 6 months ago or so. So first year from New York, back in New York, and excited to be with you all.
I'll go next. My name is Lindsay. I'm a first-year analyst on the diligence and growth strategy team. I went to Stanford and studied applied math there, and moving over to New York for the first time post-college.
Awesome. Thanks, guys. All right. I will now play just a short video before we kick off the presentation.
In the early 90s, I noticed a couple of interesting trends happening that I thought could be capitalized with a sort of independent firm. The most important trend was I saw that software, which in the late 80s was really a very cottage industry, was turning into a much more packaged, professionalized marketplace that I thought would really fundamentally change the world.
So if you think about the way Insight differentiate ourselves from the rest of the investing universe, one is focus. All we do is software.
The thing about software is it's one of the only growth industries in the world. And you know, when you talk to Jeff and what he pitched me at that lunch, you know, why do we choose software? What he talked about is at a time when software was smaller than hardware. And he basically drew a curve and said, look, you know, software's here, hardware's here. Those lines are gonna intersect and cross. And about 3 years after I started, they did. So the bet was that software was going to actually drive the value in innovation in information technology.
You know, for us, the sweet spot's probably 10 to 50 million, and that's the area that we spend the most time focused on, but we'll see exceptional opportunities at the small end of that scale, where the growth rates are exceptionally high and the market size seems particularly attractive. At the same time, we'll see some more mature companies where we think we can get sort of interesting value opportunity to drive additional growth through acquisition and through organic growth to create real value.
The second is the way we source. And we've always taken a much more proactive approach to sourcing. Rather than wait for opportunities to come to us, we've gone out and tried to find the best opportunities that exist globally.
Private equity is still a fairly inefficient market, and the inefficiencies were driven around the discovery of new deal opportunities, which didn't just simply walk into your room, were not necessarily referred to by a friend, but rather were entrepreneurs who were busy building and creating great businesses. And we today are probably the largest now technology investor with over 20 full-time professionals who are canvassing 40,000+ companies a year.
And you know, we have a whole bunch of holistic tools to help analysts source. So what I was doing with the New York Times and ripping out one ads, you know, they have a LinkedIn tool to do that. So we're using technology to do it better, faster, and more efficiently.
And then the third is having Insight Onsite, which is really allows us to have kind of a differentiated level of service that we're able to offer to our portfolio companies to help them scale their businesses.
And what we realized very quickly was many of those entrepreneurs were product guys. They had a great feel for what the customer needed, but they had no idea how to run a business. And so Onsite was created to help those companies and those young, inexperienced CEOs determine what was the best way to grow my market, to grow my business, to expand, to hire the right people, to put in place the right systems, the right processes, things like that. And really today, Onsite does the same things, but just at scale. So even today, what we're doing is helping companies determine their strategic direction. And by that, I mean which products to which customers, in which geographies, with which go-to-market strategy.
If you look at Insight Onsite and you look at the size of the group and the investment that we're making in that group, almost no funds in our sectors have the resources to be able to have a group that size.
I think what's really differentiating us today, though, is our experience and scale. So Insight had a very significant evolution over the last 3 years, and I think we had an epiphany that started around then that we could start to use our scale to advantage. And so I think for us, it's really taking Insight as a really good strategy, which is what we've, I think, had for the past 15, 20 years, and now turning it into an institutionalized business that I think could drive us for the next 10 years and create real competitive advantage in the marketplace.
Hope you all enjoyed that video. Going to take over here. So what comes to mind when you hear venture capital and private equity? So I have 4 younger siblings, and I often find myself trying to explain what I do. And what it often comes down to is me asking the question to my siblings or their friends, have you heard of Shark Tank? That's a question that I'll often ask. And they'll say yes or no, usually yes. And that's kind of what it is. There's companies that are looking to grow and want money to do so. And we help invest in these companies and take a piece of their company, help them grow, and hopefully make money in the meantime. So that's kind of the high level of what venture capital is. And Insight Partners is the most trusted investor in the software industry. So we've been investing now for 25 plus years, investing out of our 12th $20 billion fund, have, invest IPOs and strategic exits, you kind of name it, we have it, and our track record speaks for itself. And we also kind of invest across many different stages, from the startups on the earlier stage to scale-ups to grown-ups, from a Series A $5 million check through to hundreds of millions pre-IPO and buyouts as well. So a super broad spectrum of stages, which just allows the analysts to kind of look at a large range of companies. So that's super cool. So how does venture capital and private equity work? Basically, Insight raises funds. Right now, we're investing out of our 12th $20 billion fund. We get that money from what are called limited partners, or LPs, which are pension funds or endowments like country sovereign wealth funds or teachers pension fund, for example, or wealthy individuals. They trust Insight with their money. We invested in companies like Qualtrics or Calm at a certain valuation. That company hopefully grows. We make a profit, and we give the profit back to the LPs. And in the process, we take a cut of it for ourselves. So that's kind of on the high level how it works and how we kind of raise funds. So now we're investing out of our 12th fund. Our first fund was back in 1995, and we've grown a lot since then. I think we're in the process of raising our 13th. So how does Insight compare to other investment firms? Kind of like mentioned earlier, there are certain funds like you see here who invest in super early ideas, maybe like the angel investors, like you might have heard of Ashton Kutcher or Chris Sacca, or the shark people on Shark Tank. They're investing in super small ideas with relatively, under $1 million in investment. Then it kind of goes up in the venture capital world. You have players like Union Square and Sequoia. You have venture capital and growth equity. You have kind of the players mentioned there. And then you have the late stage players and buyouts as well. And the really awesome thing about Insight, especially as it relates to our job as a sourcing analyst, is being able to invest across that whole spectrum, kind of like mentioned earlier, from a 5 million, even sometimes lower now, check through to hundreds of millions pre-IPO investments and buyouts as well. So that allows us to see a lot and learn a lot. So part of the job at Insight is learning a lot about many different things. You're learning about sales and entrepreneurship, talking to founders all the time, and learning about what it takes to be a founder and to help grow businesses. You're learning about finances and the analytics side of things, doing market work and diligence and working in the data. You think about strategic thinking about strategically what areas are interesting at the cutting edge of technology. Is it this in cyber? Is it this specific piece that's going to be the future? Is it this in education technology that's going to take over? What type of bigger picture thinking? That's also a really big part of the job. And as is technology industry expertise. So it's pretty cool opportunity just to see all the different sides of kind of the finance and tech world all combined in one. And sometimes I'll just get on these calls and think like, wow, what am I doing talking to a founder with 500 employees? Or what am I doing, little Josh, talking to a company or a banker who's been banking for 30 years? And that's just the type of opportunities that Insight kind of allows. And because software touches every industry, so do you. So here's a quote from Satya Nadella, the CEO of Microsoft, saying, every business will become a software business. And you see that with the largest companies of the world, companies like Goldman Sachs now employing more developers than Facebook. Ford, connected cars generate more data in 1 hour than 100 hours of video. Domino's, Venmo, Lyft, Grubhub, every industry is being affected by software. So because of that, it just allows you to dig into everything and learn so much about all different areas. So, one day you're talking to a fintech company, one day you're talking to an education technology company, one day you're talking to a company that's selling to mortgage lenders, a company selling to mines, to, refrigerators, elevators, everything you can kind of think of software touches, which, allows the analysts to be able to really see and learn about everything. So not just do we invest across the board sector-wise, but we also invest across the board continent-wise. So here you see kind of some of our investments across 6 continents. We were just talking before this about different, changes to the slides. And Africa, Dash, we made our first investment in last year. So that's kind of exciting for us there. And really, everything is almost fair game. I think Abhi's been trying to recently source in Antarctica. We haven't got there quite yet. But other than that, we've kind of hit it all. And because of that, one day you find yourself talking to a fintech company in Africa, then a cyber company in Israel, then an ed tech company in India, and so on and so forth. And I mean, who can really say that they're doing that? It's pretty awesome. So anyways, that's kind of the awesome thing about Insight and software. But we are software experts at our heart, and that's made up of different parts. But we have the investment team, which Abhi and I sit on, which is largely, and Abhi will talk about it more, but helping find and find companies and then help work on the deals once we find them. And then the on-site team, and Lindsay can talk about that more, but DGS, which helps really with diligencing companies before we invest in them and help work with them, kind of think about strategy post-investment. But anyways, I'll leave that to Lindsay to talk about it in more depth a bit later, or maybe not. Insight Onsite, it's a pivotal part. It's totally like a huge part of who we are, kind of like the video mentioned. That team is bigger than the investment team, which Abhi and I sit on, and is just there full-time, free of charge to our portfolios, thinking about helping them scale, working with Insight team and investment team to help with diligencing companies once they're identified. So it's an incredible team. They kind of do all that's mentioned on the slide, but again, I'll leave it to Lindsay to speak more to that. And then Insight is committed to diversity, equity, and belonging. It's something that we care a lot about. We have different ERG groups like Black at Insight, Outsight, which are awesome communities in and of themselves. And then we also have Insight Impact, which helps with volunteer initiatives. Like, we have different events kind of throughout the year, helping give back to communities that we live in. So that's super exciting. And beyond that, we have CEO Scale Up Pledge with over 130 signatories in the portfolio, and then a Vision Capital Fund, which is a $15 million fund of Insight's partner capital that is fully deployed across 14 managers, representing a diverse set of founders and leaders. So that's also just a super exciting initiative that we have, and everyone is super important to feel included at Insight, and something that we all take super seriously. So that's on DE and B. So our core values, that's hunger to win, heart, creativity, continuous reinvention, and scrappiness. It's something super important to us, and as something that we're kind of looking for as we invest. So anyways, that's kind of on that. Happy to answer any questions later, but I'm going to pass it along to, I believe, Lindsay, who's going to kind of talk about the life cycle of a deal.
Thanks, Josh. So Now we're going to transition over to talking a little bit about the life cycle of the deal. And the reason this becomes important is that you'll actually see the life cycle of a deal reflected in how the two different analyst pathways are broken down. So when we think about what it means to make a private investment, there's pitching, there's diligence, there's closing, and then there's the post-close activities. And the investment analysts and DGS are kind of involved at various points to various extents, and then we'll kind of go into the difference there. So I think the really unique thing about Insight is, you're fresh out of college as an analyst, and you're given so much heavy exposure to technology startups in a really, really hands-on way. And that happens all across the investment timeline. So if we think about making an investment, at first there's our sourcing engine where we have coverage on pretty much every single notable software company under the sun. And I don't know how many other firms can say that. And then there's the kind of selecting. So if you think about the funnel, there's everything that's going in, and then there's various metrics that we look at, any kind of benchmarks we have of, in a particular market environment, what passes our filters of what is a solid company to invest in, and what do we have to believe for the investment to make sense. So that's the diligencing process. And once we actually decide to make that investment, we are going to go along with our portfolio company for usually 5 to 7 years, but can be longer, can be shorter, to scale. So that involves a lot of growth strategy, actually helping them all along the way across any new fundraising they have, any kind of operational challenges, and to solve all of that. So you can see how the two different full-time analyst tracks kind of break down across this whole timeline. So our investment analysts are really the, I think, heart and blood of our sourcing engine, and they spend a lot of their time actually being on the phone with founders and learning firsthand about what the founders are building, and then also having a lot of proprietary knowledge about the actual sectors that they're investing in. Whereas DGS starts becoming involved starting from the selecting phase. So when we're actually doing diligence and market work on the companies that we're interested in investing, and then post-close, helping them with any of the portfolio strategy and also the scaling part of the business. And I think now I will pass it on to, I believe, Avi.
Yeah. All right. Hey, everybody. So this is effectively what the investment analyst, and to parallel that, the summer investment analyst role look like. So from a structural perspective, Insight is pretty unique in that we're a much more bottoms heavy investment firm than a lot of other traditional software investors. So if you think of standard venture capital firms, they're a lot more tight knit, and it's effectively just people we call partners that have been working in the industry for like 10 to 20 years. They're probably around 30 to 50 years old, and they sort of run the show. But here at Insight, we have a lot more responsibility and effectively headcount at a lot more junior levels. And the reason we do that is this concept of sourcing or finding companies to potentially invest in. And the main takeaway from this slide, or the Insight experience as a whole, is that we do have a meaningful responsibility in at least driving the investments that the firm makes, which is actually pretty unique when you compare it to a lot of other venture firms. So from a timeline perspective, the analyst is focused most on the identification of a company. So what that effectively means is just going out on the internet or talking to people in the industry, or going to conferences in places like Vegas or Boston or even Germany and finding companies to talk to. You make contact with them and try to sustain dialogue with them for quite some time. And then when these companies are raising money at a point of revenue and at a point of size scale where it makes sense from Insight's proprietary strategy, we then evaluate it more as a group. So that's when you start talking with people older than you that are associates and VPs. And then at some point when you're starting to get into the final stages of an investment looking really good, you start involving principals and partners who are even much older than you in the negotiating, diligence, closing, and then ongoing support. So we are effectively the foundation of this entire process, because without the identification and the context, there's effectively no ongoing support and closing with the investment. So that's the main takeaways. Like, we do actually do real stuff here. And so sourcing is a buzzword that's thrown a lot in a variety of different industries. The roots is primarily or the word is primarily rooted from procurement. So in procurement, you're thinking about like the supply chain, or effectively like where do you find materials? That's where the term sourcing originates from. And then we've taken that term, and a lot of investment firms have taken that term, and we apply it to like investment. So sourcing, in our view, effectively means going out and finding companies to potentially invest in. And it is a little mix of detective work. It's a little mix of sales. You can also put your investor hat on, but a lot of it involves building meaningful relationships with founders, which is effectively hopping on Zoom calls like this pretty often. You can meet them for coffee. In some cases where we're really trying to win a founder over, like some analysts have flown over to Canada, or some analysts have taken them to a Knicks game. So there's a lot of things you can do to potentially build a relationship or try to ingratiate insight to the founder. And it is a sales first role, which means it's primarily communicative, but that's pretty transferable throughout life. So whether or not you are working as the manager of a certain product team, or you are working in a direct sales role, or even if you're an investor at a top place, at a top level, like you ultimately need to sell and tell someone why they should take you over someone else. And that's where we sort of get a foundation in starting out at Insight. And so this is a little bit zoning in on the timeline and providing some examples as to how it effectively works with the sourcing. But we talked a little bit about the identification and contact, evaluation, and ultimately the investing, growing, and selling a bit beforehand. But the interesting point to take away here is that we are participating in this entire process. We are most responsible proprietarily for the identification and the contact part. But the cool thing about Insight is about 70% of the investments in companies we make, in companies like Calm, and companies like BeReal even, they're all because analysts decided to find those companies, analysts decided to talk to those companies, and then analysts found them interesting enough to elevate to senior people to show them that these companies are worth considering. Because there's a ton of companies out there, and it's really hard to cut through the noise to find those top companies that'll actually impact businesses or impact consumers. And so we really help Insight cut through that noise and get to the opportunities where something is actionable. So whereas at a lot of other firms, it's mainly older folks, partners that are finding the companies to invest in, at Insight, we're making effectively that decision and elevating what's interesting. So a lot of that involves industry research, of course, the outreach, and then we also get involved with some modeling and investor memos and presentations. So that's part of it. And then the investment analyst is also involved to some extent in post-close support. So that's effectively like after you invest in a company, how do you help that company do better? And so we particularly help them with thinking about buying other companies that could improve their strategy. We also thinking about ultimately how to sell their company, or potentially how these guys can IPO to get a big cash infusion, but also cash out for all of their hard work. So it's mostly on the beginning part of finding the company and investing, and then we do a little bit of the supporting the company after, whereas the on-site team does a lot more of that than us. And yeah, this is like a typical day in the life. Very canonical. Mine is pretty similar. Might be a little bit boring, but I like set my alarm for 7:30 Monday to Friday. I probably wake up like at 8:30 and go on my phone. I take a shower. I get to the office by like 9:30 or 10, so I'm a little late, but that's my problem. And in the morning, I'm usually scrambling, but I have some time as I'm like going to the office to like get coffee, because I like getting outside coffee. I like read Twitter a lot. Twitter is actually a really great source of tech news. And so that's effectively like our newspaper. And we also read some letters. That's definitely true. In the morning, I do like a few calls with individual companies just to see how they're doing. Certain companies might be raising, in which case the calls are a little bit more involved, but a lot of them are super casual. And at a certain point, I've been talking to a few folks for like 1, 2, 3 times in the past year. So we know each other at a decent level where it's not awkward or it's like strictly formal. And, after those calls, I normally get lunch. I'm trying to eat more Sweetgreen because I'm trying to be healthier, but I was getting a lot of Chick-fil-A and pizza when I first started. So that's also definitely possible if you have been healthy, but that's my New Year's resolution. And then sometimes during the later part of the day, we have effectively pitch meetings internally where we collaborate as a bigger team with like older and younger people about what companies are interesting. You can check out and research potential conferences to go to. And you also have a nice gym at Insight with a Peloton and a nice view of New York City that you can work out at night. Josh is a very fervent user of the gym because he's trying to get much bigger. And then usually I end the day around like 8 to 9. So it's like a pretty long day, but effectively a lot of it is just like finding companies, emailing companies, talking with companies, reading about companies, and then effectively discussing companies internally. So it all revolves around like what opportunities are out there and what do I find the most interesting to tell someone else about. So that's what probably summarizes the day the best.
And Avi, I think it's just worth noting, because I never really realized this before I joined Insight, just how much you control your time and how different that
Yes.
is to a lot of your friends. It's crazy to me. Like I can do what I want almost all the time when I want to. If I want to have calls that, all on Friday and Thursday and do that, and then have more relaxed Monday through Wednesday, you can do that. You can really schedule it exactly how you want to.
Yeah.
Like I see a lot of my friends at different banks or consulting firms where they're all the time like on their phone and nervous. Oh my, is my MD gonna email me at this time? I can't have any time to myself. But the beauty of this role is on a Saturday, like, or Sunday, or time, like, that that's your time. You know that you can plan a dinner any day of the week and have that. Even a lunch any day of the week and can make it happen. So that's kind of
Yeah.
just something that I never
That's
thought.
actually probably the biggest takeaway. Thanks, Josh, for leading me there. The biggest takeaway with the inside analyst role across the on-site team, across the investment team, is relatively to a lot of other entry-level jobs, whether that be in primarily finance, like investment banking, or consulting, like management consulting, relative to other entry-level jobs, just like in the corporate world or the business world, we totally set our own schedules. So from the one negative point there is that it can be a little bit daunting and scary, because like you have to be self-motivated and dictate your own time and make sure that you yourself are being responsible for the ultimate output you're being judged on at the end of the day. But the by and large, greatest thing about this job is that I know what I'm doing Monday to Friday effectively. I know I can chill on the weekends, and I'm setting my schedule to what works best for me. And you really don't get that flexibility at a lot of other comparable places. So that's like a really good point to hammer home here at Insight. So I'm not sure if you guys are too familiar with the app Calm, but it's a really big mobile application, and it's primarily centered around mental health. And I think the first start was really in the meditation space. But that was a pretty interesting case study of something we invested in. Effectively, we heard about Calm a long time before a lot of other people knew it, because our job as analysts is to identify companies extremely early before there's really a buzz in the public sphere. But we started talking to the CEO, someone literally our age reached out, and in 2016 started developing a dialogue with Calm, because they found that digital health would be a much newer and savvier form of delivery to make mental health much more accessible than maybe traditional means. And then the second thing was that meditation as a concept was also picking up steam. So they had some thesis forming in the back of their mind about why a space was particularly interesting. And we had to, keep pushing and effectively get the CEO to respond by showing us the work we did. And so that's what they mean by saying that they were hard to crack, and we had to kind of chase them down. That's really our job. And at a certain point, someone that was probably around 30 years old at the VP level was able to get a reference to that CEO in 2017, 2018. And ultimately, when they decided to raise the round, we already had such a good relationship. We had demonstrated our abilities and our knowledge about the space, and we got an opportunity to invest in their Series A in 2018. And now in 2019, and continuing on till the modern day, we participated in another round, which made them one of the main mental health applications out there in terms of reaching the market first. And in 2022, they acquired a company called Ripple Health. And then we continue to work with them really, really closely to refine their strategy going forward, because there's a lot of entrants in this space, but it continues to be unique. So all of that happened because an analyst precipitated that relationship.
Great. And now I can talk a little bit more about our diligence and growth strategy analyst program, which, as we mentioned before, kind of comes in later in the investment timeline, primarily starting from diligence. And that involves, doing customer calls, understanding the market, looking at financial returns, and developing the thesis. And then after we do invest, the scaling part can really be anything that is needed to get them onto the growth trajectory. So a lot of that involves strategic planning, actually benchmarking performance quarterly, looking at pulling in our operational expertise from all of our centers of excellence on specific things that our portfolios need help on. And then also at the exit step to work on all the work required to have a successful exit, and then any kind of M&A levers that we need to pull. So a lot of this has been mentioned before, but the DGS program is a selecting and scaling an engine. I think it's worth mentioning what actually our 5 centers of excellence do and how they come into play here. So the analysts, which I'm a part of, the DGS analyst team, are aligned to diligence and growth strategy, but we do have 5 additional teams on-site that specialize in different operational areas, and they're really experts with a very long career in technology startups with so much expertise to get back to our portfolio companies on anything that they need help on, for example, sales, marketing, product, tech. So when our portcos actually run into specific issues, there are these experts who are in-house that we can call to work together with us to resolve any of issues that our portcos have. So I think this is a really unique relationship, and in a way, DGS is, both intermediating between OnSite's Center of Excellence as well as the investment team as we're going through the diligencing process. So it's a very multifaceted perspective that you have as part of the Insight organization. So moving on to a day in the life, I think also just to clarify, there's kind of no normal day in the life. And I think, as Avi already mentioned, that's really the beauty of the analyst program here. A lot of our work revolves around market work, so customer calls, and that requires interview guide, which we draft ourselves custom to any company that we're diligencing. Specific questions come up time and time again, but there are also nuances that we like to push on. So after you draft your interview guide, we may talk to the diligence team on where the market work status currently is, where we're going to push, what specific questions we have. And then we actually go out to call customers and hear about their perspective firsthand on the prospect that we're diligencing, looking at different competitors. And then the town hall during lunch is kind of where DGS plays as part of OnSite. So OnSite, because we have all of these experts on the centers of excellence, they often organize different events for us just to knowledge share and hear about what actually goes on the operational side. So Pablo, for example, our head of sales Center of Excellence, would come and talk to us about, actually how to build a sales funnel, and then the kind of different modeling tools they use in terms of projecting sales, and then putting in the actual number of headcount to meet targets. And these kinds of town hall meetings tend to rotate. Maybe another day you'll hear about marketing, another day will be about product. It just really depends on which Center of Excellence is in charge of knowledge sharing that time. And it's been a very enriching experience, I think, for me, looking specifically on the ops side and having these experts really just be part of our team here. And then switching gears, post-lunch, we can look at some return scenarios. I think it's worth pointing out here that on DGS, you're in a usual time working on a couple of different diligences all at once. So you may be looking at a company, for example, in the cybersecurity space, another could be healthcare, another could be fintech. So you're just really kind of context switching a lot, looking at different markets, looking at whole different sets of competitive landscapes. So there's context switching there. There's also context switching in whether or not you're talking to customers, whether or not you're actually building models, doing more quantitative versus qualitative work. So the day is very varied. And then you may switch gears to call a portfolio company CFO if, we already did a benchmarking analysis last week. We just want to go through it and then see what questions they have. And then later on in the day, you may review interviews and notes that you have from all the calls you did with customers, and then start building a thesis and the updates you have to the deal team on what the diligence stands. And then any additional analyses, finally catch up on emails, and then work on another interview guide for a separate diligence. And all of this, similar to the investment side, we do get to set our own schedule. We basically work with expert networks to identify the top customer prospects that we get to talk to. And you're kind of responsible for scheduling, you're responsible for screening who you talk to, and you really build your own schedule around how you get the insights you need. And all of this the onus is really on the analyst to go out and hunt for those things that ultimately help you build your thesis for the investment. Great. I think lastly, we just have this quick case study on Monday.com, which is an investment we had that had quite a bit of DGS and OnSite involvement. So when we were looking into leading the $25 million Series B round in 2017, we had several diligence questions. So we were able to call a bunch of their customers and then look into the data to understand their revenue growth, their new logo momentum, CAC payback, et cetera. And then a lot of the market work helps answer key questions on the competitive landscape and Monday's differentiation. and also looking at the market opportunity convinced us of the thesis of that ultimately drove the returns that we were able to get. And Monday did IPO in June 2021.
Awesome. So I'll quickly cover the path ahead. So Insight's pretty cool because there are a variety of adjacent areas that you can explore either here at Insight or externally. So sticking with Insight at the bottom, you see this here called internal advancement. And so that effectively describes people that started out of college at Insight, whether in a summer analyst or analyst capacity, and have worked their way up and through the firm at every level. And the canonical case here is the right side of that internal advancement picture, Ryan Hinkle. He effectively started as a summer intern, and now he's probably one of the top 5 or 6 most important people at Insight, running a lot of the investment decisions here. And so Insight, over its 25-year history, has actually had a uniquely large proportion of people come on right out of college and still stay at the firm and dictate a lot of decisions at the top. So that's, of course, the way that people will triumph. That's, of course, one of the differentiators, but you can also do other things. And I will say, like, the one constraint is that most people tend to work something in technology afterwards, just given that if you're applying to Insight, you're probably a little bit more interested in technology intrinsically. Maybe you don't know why, but that's usually the focus. And so we have people go on to work at companies that Insight invested in. One of those companies, for example, Shutterstock, is like that stock image company. If you guys have ever seen that, that's a decently famous one. We've had people start their own companies as CEOs. So the company Intello was sold to another really big company called SailPoint relatively recently. Eden Health is like a mobile application for healthcare that facilitates people, for example, getting flu shots in the office. And you can even go and work at a place like Y Combinator for a little bit with your startup idea and incubate that and see where it goes, which someone from Onsite actually did a few years back. So that's definitely a path you can pursue. You can also go work at big tech companies like Palantir or Tesla. And if you want to go to business school, you can do that. And we've had people go to Harvard, Wharton, Stanford. So really anything you can do after Insight, it just, like, with the caveat that a lot of people do end up sticking in tech. Not to say you can't do something outside of tech, but that's just what the ecosystem tends to form with who tends to apply to Insight in the first place. So some common themes to wrap up, and this is touching on something I started with on the last slide, but the technology aspect of the job is pretty critical. I would say, like, if you are someone that liked video games a lot as a child, or you're someone who plays on your phone a lot now, or did that a lot as a kid, or you're someone who is interested in how technology is affecting things such as real estate development, or how technology has exacerbated gentrification in the Bay Area, all of these, like, different, like, literal and, like, societal questions around, like, the future of technology. Maybe you can't rationalize that, but if that just appeals to you, then, like, this is a great place to come. And I think that's the one unifying factor among the diverse people here, is that technology is what drove people to Insight and why so many people have stayed here or moved on to other technology roles. Another thing that Insight analysts unifyingly have is the ability that we can kind of fast track our career in investing, which isn't necessarily an accessible opportunity out of college, especially in venture capital, which is normally regarded as a very exclusive club you have to enter in. And so Insight is really good about expanding that access and has been trying to do so to let, really anyone from a young age from anywhere try and join the firm to have an impact in the venture industry. Another thing that Insight folks tend to be is very open and communicative and willing to talk with people who are founding companies and being very receptive. That's effectively just the DNA of the job. And of course, we like people that are smart, that are motivated, and that are independent thinkers. But all of you coming to this hopefully is just like one tidbit of representation as to how you guys are already doing a little bit of all of that. So this is what generally Insight analysts are, and more. And so what we look for in candidates is, a lot of what some comparable places are looking for. I would say the personal initiative aspect is huge here, just because you're self-directing your own schedule and a lot of the output is dictated on the input. People aren't necessarily telling you what you need to do each day, and that really falls in your shoulders. So I would say that's super important. I would say the probably second most important thing is culture fit. In such a super diverse place, a lot of mix of personalities and interests, with I would say the main unifying thing being that people like technology. So that's something else. And of course, we also look for people that are willing to take measured risks, because that's what an investor has to do. And of course, like professional readiness, being on time, having the ability to talk, to write, all of that's obviously important. But I would say the initiative and the culture fit's probably what we look for the most.
Awesome. Thanks, guys. So before we break into some Q&A, I just wanted to give you a quick rundown of our application process and what programs we have open. So currently we're hiring for our 2024 programs, and we recommend you apply as early as possible for these programs, just because we do review the applications in order of when they were completed. So for the investment team, applications consist of submitting a resume, a transcript, a HireVue video cover letter, and a predictive assessment. So for current sophomores on the line, we have our Inclusion by Insight Summit, which is happening in March, which is a really cool opportunity for diverse students to hear from diverse leaders in the industry and attend some cool workshops. And then it'll end in a super day for our summer analyst program. And then in terms of internships for sophomores, we have our 2024 summer internship program, and we'll begin hosting super days in March, and we'll continue to host 1 to 2 super days a month thereafter till we fill that class. And then for our current juniors on the line, we have our full-time investment analyst program, and that's the same process as the summer program. And those interviews will happen mid to late summer. And then lastly, we have our on-site diligence and growth strategy analyst program. Those applications, you only need to submit your resume and transcript, and those interviews will also happen mid to late summer, and there'll be a mix of behavioral and case study interviews. So with that super quick rundown, if there's any questions after on any of our open programs, feel free to email the recruiting mailbox at recruiting@insightpartners.com, and I can help get any of your questions answered. But we can go ahead and jump into Q&A. So let's start out with this question. What do you see as the biggest challenge / opportunity facing the company?
I guess I could start off with that one. So in terms of biggest challenge, I'm assuming you're talking about Insight. So with regards to that, on the macroeconomic context, if you guys have been paying attention to the news or if you take any economics classes, there's been a very big fluctuation in the interest rate environment. So effectively, it's just a lot more expensive in general for businesses to do anything. And as a result, there's been a lot of layoffs, unfortunately, recently. And much of that has been concentrated in the tech sector because a lot of these companies effectively haven't been very efficient for a long time because they've been riding this really big wave of tech doing really well. And so you see this with an example like Twitter, for example, with Elon Musk exemplifying that on one end. There's a big movement in Silicon Valley, given the changing environment, to sort of trim these companies down to where they're paying less for employees and can operate more efficiently. And so ultimately, this entire environment, what that means is the biggest challenge facing Insight probably in the next 5 to 10 years is effectively investors believe that software companies might be worth a little bit less than they have been for the past 5 to 10 years. So looking forward, like, how can we invest in really good companies that can grow really efficiently as opposed to grow at all costs? We might not be able to get the highest values that we were able to get before, but we can still obtain really good values if we're a little bit more selective. So it's effectively being a lot more tighter and being scrutinizing with our investments in a much bigger way than we were used to. So that's effectively the macro backdrop. That's a challenge. But the biggest opportunity in that frame is like looking at a new set of companies. So whereas before we were investing a lot earlier into much riskier companies with bigger potential, we're effectively switching gears to investing in a bit older companies with some slightly more mature technology, but that could provide a more predictable outcome. So it's just shifting gears. So there's still a big opportunity there. It's just a little bit more challenging, and it's our job to navigate through it.
Awesome, thank you. Next question, are Insight analysts assigned to specific regions, or do they find themselves working internationally? For example, would you find yourself working with an American company one day and an Asian or European company another?
I can take this one. There's no specific analyst role based off geo. So, I'm looking on all 6 continents, same as Avi. Yeah, you can look anywhere, which is awesome. You can, Avi typically likes to look at where a lot of Southeast Asian companies and European companies specifically for him. And but now I'm joking. But yeah, we can look anywhere you want.
I was gonna say, like, I think historically they hired one person to focus on China a really long time ago, and China is interesting because the government has a lot of control over the tech sector there. So there is some inherent risk that we have to price in. So we're not really as active as much there anymore, but we still look at things on a case by case basis. And then we recently hired someone to focus on India. And then more recently, we hired someone to focus on Africa. So we've made these hires before, but they come at a much more like mid or senior level when you have some geographic exposure and you speak the language. So from an entry level perspective, no, but we can also have that flexibility to talk to whoever from, New York City, from New Jersey to, Antarctica, if that ever came about. So a lot of flexibility.
I think it's also worth noting though that you can definitely, there's so much flexibility, but you can zone in on something specifically if you wanted to. Like if you wanted to really become more of like a, European expert, you can spend almost all of your time on Europe. Same for America. Same for also specific sectors as well. Like I have a friend of mine, my year is almost doing exclusively healthcare companies, and she just loves it. And that's really, she's focusing in on that. So you can really zone in on a specific area, stage, sector that you like most.
Awesome. Next question. What are your thoughts on pursuing a startup after graduation before planning to work at a venture capital firm?
Okay, I can jump in really quickly. So I've had friends that have pursued that role. It's even more exemplifying the concept of setting your own schedule, because at that point, if you are working at a startup, depending on how early it is, there's like zero to little structure. And so it really falls upon you to dictate how you can add value to the startup. I would say that it depends what stage the startup is at. Companies that are around like pre-seed, seed, series A, that's a pretty risky position to be in, because at the end of the day, everyone post-college, wants to be in school or be employed or have some way of sustaining themselves. If you're at a company that's like more like Series C, Series D, Series E, if you still call that startup, that's a much more safer company to join. But the really ambition of a lot of these startups is to effectively give you some exposure to risk, but also give you some exposure to returns, in the sense that if the startup does really well, so will you. And obviously, the earlier and riskier it is, probably the bigger potential for you to do really well. So you have to weigh that appropriately. I think it's a cool thing to do. I honestly think working somewhere for 1 to 2 years first and just understanding how work life is and how it's different and what you're good at in some way, and then working at a startup provides a really good balance, because there's not much to rush into after college. But that's just my perspective. I don't know if Lindsay has anything to share.
Yeah, I can add a little bit. I think for me, actually coming from Stanford, the majority of my friends did choose to go into working for startups right out of school. And I think the reason I thought Insight was a better pathway for me right out of school is just that, actually, I think the biggest challenge of working for a startup post-college is choosing which startup to work for, because as Abby said, there's kind of a long spectrum of what stage the startup is in, and then you need to kind of be very discerning as to what your startup's own runway and growth potential is if you want to benefit from the high upside that joining a startup actually gives you. And the funny thing is, part of being an analyst at Insight gives you the insight to actually discern startups from one another and know which one to join. And I think, I came into Insight kind of knowing that maybe ultimately I would want to be an operator at a startup or somewhere else, but going through the analyst program actually gives me the toolkit to recognize a good startup from a bad one. And I feel like I'll have more confidence making that decision later on.
Yeah, that's a really good point, honestly. I always describe like the job as looking from a really high point of view at just a bunch of different companies and industries. And in 2 years, you'll have a much, much better idea of not only like what you're good at and what you like from a work function level, but also like what industry is interesting to you. Like I work on a team that does a lot of technical software. So like cybersecurity, things selling to developers, machine learning. And coming in, I was like, oh, I don't want to do that. Like I want to do like Uber, or I want to do like Lyft. But there is a lot of learning in the technical complexity of a lot of these companies, and you don't appreciate a lot of things until you are forced to get exposure to them on the job. So it's a really good way of figuring out what you actually like and what you would be interested in doing that you can then apply to the startup that you want to work for.
All right, we will head on to the next question. So what criteria or aspects do analysts search for when hunting for companies?
There are a lot of different things you can kind of look at just from outside looking in. Firstly, you want to try and find it in a space that's exciting for Insight. So certain, sectors are more interesting to the investment committee than others. You kind of want to see as well if they have momentum, and it's hard to kind of tell from the outside, but maybe if you see employee growth going up a lot in kind of a short span of time, that's interesting. If there's a really strong founder, that's super interesting. These are kind of some of the things you can think about looking in. And then obviously when you talk to the company, then it's digging in more to actual product differentiation and product retention and revenue growth year on year and the management team, founder strength. But those are kind of some of the quick high levels as far as importance of thinking about companies.
Cool. Question for Lindsay. What skills do you see as most important to be successful for the on-site DGS position?
Yeah, I think it's really hard to distill it down to just one thing. I think a lot of the skills that you pick up are, I think, I would say not as challenging as a lot of some of the college classes you take. It's more of just being really open-minded to learning about different industries, looking at different types of companies, having curiosity of actually diving into data a lot, being in the weeds a lot, being detail-oriented, and also just the general context switching that happens all the time in a fast-paced environment like this. So yeah, and just having a good attitude while you're at it.
Love that. Okay. Avi, over to you. So this question says, I know Avi mentioned how Insight is adapting to higher interest rates, inflation, and difficulties in the tech sector, but I'm also interested in how Insight normally reacts to big shifts in industries or in the economy.
Yeah, I would say I don't have the benefit of being at Insight for a really long time, but there's only been like a few tectonic shifts in Insight's history. The first came in 2000, which was effectively this period when a lot of tech companies emerged and this paradigm around tech being the future industry of the economy really started to solidify. So Insight was founded in 95. So the 2000 .com crash, as they call it, because a lot of, fake companies that, not fake, but, effectively like flimsy companies that were riding the wave of just going online and having a website, a lot of those didn't end up doing too well for a variety of reasons related to like their underlying unit economics. But Insight had the at least privilege of seeing that. And I say privilege because it wasn't a good time to be in tech or investing in tech, but it was a good time to be very scrutinizing with the investments you were making. So Insight saw that. Obviously, the reaction in any downturn when the economy or the tech sector isn't doing too well is to pull back investment. And that's like very natural. But Insight over the course of then like 2000 to 2010 was very active and successful in making some great investments. Then in 2008 to 10, the financial crisis happened. And then, post that, of course, we might have pulled back, but then we started being super active again. And then in COVID, when that was another huge shift to the economy, many people thought that in the short term, right after March 2020, there would be a huge downturn. And in the stock market, naturally, it kind of went against what we thought would happen, because what people realized was that a lot of power in software is the ability to be distributed and still get access to that same value. And you can use software from your home. Like an example is like Zoom. That company did extremely well because of COVID. And so we actually got even more aggressive. So we've seen a bunch of tectonic shifts. By we, I mean the firm. None of us on this call probably have, but the general reaction of Insight is to pull back for a bit and then start going full force. And we maintain that software will drive value. And even in this current downturn, if you look at valuations from like 2000, when that tech.com bust happened, and valuations now of really large tech companies, like they're still like dramatically different. And so I think that just speaks to historically how software is compounded in value, and we maintain that directionally going forward.
Last question for you guys. On both the on-site and the investment teams, do you have training programs when you start either a summer internship or a full-time analyst position?
I can take it as far as the investment team goes, and I did do the summer as well. So there's definitely like a ramp-in period on both the summer analyst program and the full-time program, as far as thinking about what Insight looks for, how to source the best ways possible, how to lead a call. You'll first see calls, you'll shadow calls with kind of older people first before hopping on calls. Then you'll co-lead calls for a week, and then you'll only so many few weeks in, you'll kind of get on your first call actually by yourself. You'll have a whole week to kind of source companies as well before you hop on to a call. And then you also will hear from every single partner at the firm as well about 3 of their most interesting or exciting or notable deals that they've done in their 25 years or whatever at Insight. And then that also just kind of gives you a chance to talk with them and ask questions to them. So it really, I think, gives you a good sense of who's kind of leading the firm. And then you also kind of have what we call a portfolio project. So going through all the different companies at Insight, explaining each one, and it gets split up among the however many analysts there are, and then they'll all get read through in one like 4-hour, 5-hour meeting where you can kind of just have a very high level sense of all the different companies that Insights has invested in. So definitely not just like you're thrown out there and asked to start talking to companies the first day of the job. Is a serious kind of ramp up process, and I think all of us felt pretty prepared when we started hopping on calls.
And then I can add a little bit on the DGS side. So we had because none of us did the summer internship, we had a full kind of 2 to 3 week long training program at the start of our full-time experience. And it was working through a case called Nearpod, which was one of our previous EdTech investments that actually exited. So it's a mock kind of investment where it culminated in us actually drafting the investment memo for it, but it involved a lot of our coworkers who will become associates and VPs that we work with, teaching us kind of short condensed courses on valuations, on how to do a customer call, on how do you distill a thesis, how do you actually do the market model that we have, and then also the other customer file cuts and other data analyses that we do. So we actually work through all the motions thoroughly so that we can produce the end product that we need, which is the memo. And elements of that are still being used every day on my job right now. When we do cut a customer file, I look back to the training model that we had, and yeah.
Awesome. Well, thank you guys so much for presenting today and answering all of the Q&A questions, super helpful. If there were any questions that we weren't able to answer, you guys, please feel free to email recruiting@insightpartners.com. And that's really it. We look forward to seeing your application come through, and have a good night, everyone.